Merhabalar. Öncelikle uzun vadeli fonların sermaye piyasalarına dönüşü konulu panelimize hoş geldiniz. Umarım faydalı ve verimli bir bölüm olur. Ladies and gentlemen, we are honored to have our three distinguished guests with the wide range of representation. Thank you all for joining us today. Let me kick off by briefly introducing our esteemed panelists. Welcome, Emre Bey, but Emre Bey is still not online. Are we able to connect him? Bağlayabildik mi acaba? Görüntü yansıtılmış olacak diye anlıyorum ama. Harika. Ses de geliyorsa sorunumuz yok. Tamam değil mi? Okay. Welcome, Emre Bey. You are joining us online. Great to see you again. Emre Bey is the head of Frontier Markets and Portfolio Advisor at East Capital. He's currently based in Dubai and provides macro and market analysis on global frontier markets, as well as Turkey, the Middle East, and Africa. He has worked for East Capital since 2006, first as a portfolio manager in Turkey and global frontier markets in Stockholm, and later as a portfolio advisor in Dubai. Okan Bey, hello again. Okan Bey is a senior vice president and corporate credit analyst, corporate credit research analyst at AllianceBernstein. He focuses on emerging market issues, and he's with the company since 2012. Prior to that, he was a director in the Global Markets and Strategy Group at Royal Bank of Scotland, and before, he was a director in the Emerging Markets Fixed Income Research Group at JP Morgan. Hi, Frederick, welcome. Frederick is the director of Shareholder Intelligence at S&P Global Market Intelligence. At S&P, previously IPO, he's responsible for shareholder ID services, and he has been dealing with the fund flows for plus 15 years.
Thank you very much.
My pleasure. Before we jump into our discussion, I would like to start by sharing that recently there has been a remarkable rise in the number of meetings and queries from the investment community. We have also experienced the resurgence of conferences, which all reflecting the growing interest, actually, even though the foreign share in free float are still at historical low levels, unfortunately. Relatedly, in this panel, we would like to discuss changes in the landscape and how investor relations can contribute to this environment. I will start with Frederick, but we'll turn to other panelists to get their comments as well. Let me begin with you, Frederick. Do you agree with this observation? Can you really say that the long-only funds have started to return to Turkish corporates, and also by looking at the recent S&P data? From an ownership perspective, do you think that the current outlook is still promising? How do you see the market performance in the last few years? It could also be very helpful if you share some relevant data from the recently announced Flow of Funds report.
Yes, thank you very much. First of all, thank you very much for being here. Thank you. It's always a pleasure. Yes, spoiler alert, this is true. I can vouch for it. And the presentation, can I have it on the screen?
Sunum var. Birkaç slide.
Okay. Okay, perfect. So on this slide, we see very clearly that funds have returned to the Turkish markets, especially from the UK and the US, and also from Scandinavia. Scandinavia is driven by Norges Bank as one of the biggest investors in the region. And interestingly, the increases came what I would call post-pandemic in 23 and 24. Even better is the news that the inflows were driven by active investors. And although passive investors, as we learned in the previous panel, are also on the rise, active investments really drove the inflows. So that's very important for investor relations because it provides a great momentum for your story, for your communication. And as you correctly said, the number of meetings have increased, and I think that's very visible in the data. Speaking of the types of investors, it's exactly what we talk about is the long-only investors, like growth, value. Index is also on the rise, but the majority is growth and value, so the long-only investors. There's this bit of a proportion of hedge funds, which is also on the rise, but it's very, very small, but it's nothing bad. They provide liquidity, and they're very important for the market. And important to point out here is that long-only really means long-term or long-term oriented, so a low or medium turnover, which means they are invested for a long time. Looking at it from a sector point of view, you will see that the active part on the left-hand side, pretty much every industry has a positive influx, with a few exceptions. Financials, energy, and consumer goods are on the forefront, and I think that speaks a very clear language. So in summary, yes, long-only funds are returning to the market. The largest inflows come from North America and the UK. Positive changes are driven by long-only and active investors, and sector inflows come from mainly financial, consumer services, and energy. And to the question whether we still see the momentum, yes, we do see it. The macroeconomics remain challenging, but have improved significantly. So that should be a trigger for long-only investors to come to the market, and that is also a very good news for proactive investor relations, as we heard in the opening speech. Companies that have a proactive IR program do better than companies that do not. And from what we see and from what we hear from our Turkish clients, they do very well in that sense. So well done to all of you. Thank you very much.
Thank you so much, Frederick. Thanks for supporting the current outlook with the recently released data, actually. Emre Bey. Bizi duyabiliyor değil mi? Sıkıntı yok. Göremiyoruz çünkü. Okay, you're there. Emre Bey, what would you think about the return of long-only funds to Turkey? We would also like to briefly hear your comments as you have a deep expertise in the equity investment.
Yes. So first of all, thank you for this opportunity to take part in this discussion. I'm really sorry I'm not able to join in person. And apologies to other panelists. There's a big talking head behind you. I don't think it looks that good, but let me start maybe with the long onlys. I completely agree with the view of Frederick. Long only is probably not the best way of expressing it. We should be talking about long-term long only funds, because long only funds investing in Turkey are behaving like hedge funds nowadays. So they are very short-term oriented. And in fact, when we look at the figures, of course, we are coming from a low base. Think about what happened beyond 2018, 2019, when foreign investments were declining in a significant way. But when we look at them, I think they have been coming in, right? Since last year, since the elections, May 2023, we have seen about $4 billion of inflows to stock market. That's a big number. But unfortunately, starting from May, 3.5 billion of this 4 billion, which came to Turkey, left. So net, if you take into account of rounding errors, we are talking about only $300 million of net investments from non-residents since the elections. That's nothing in the bigger scope of things. If you think about emerging markets landscape, that's nothing. I think the answer to the question is long-only funds. Are they coming? They are coming, but they are at the same time leaving. I think the point here is that they are window shopping. That's a good development. I don't want to sound too negative, and I have some other explanations about some structural changes around Turkey, not only about Turkey, but also the investment landscape has been changing. So I think there are reasons for foreign ownership to decline to historical low levels. But I think history is very irrelevant. We can talk more about that. And foreigners that are investing in Turkey now are mostly tactical oriented, and they are very eager to book short-term gains and look for the next opportunity in the middle of a volatility. To change that, I think it's going to take some years to go back to good old days. But I don't think we'll be, it's not a pessimist take, by the way. I think we should realize the changes around us, but I don't think foreign ownership will be climbing up to these historical high levels that we were talking about.
Yes. Thank you so much, Emre Bey. It's very helpful to have a better of understanding actually on this point. Okan Bey, do you have additional remarks to this? We would also be happy to get your thoughts from the fixed income points of view.
Thanks again for the invitation for this great event. As many of you know, the fixed income as an asset class has 4 sub-segments. So it starts with like the currency, then we have the rates, which is the domestic government bonds. Then we have hard currency sovereign bonds and hard currency corporate bonds. So what we've seen is obviously all these are driven by the macro story, and the macro story is very much linked to the public ratings of any country. So when you look at like since the presidential elections, at the time the positioning for any of these 4 was like all-time low, and the expectation that Turkey moving from investment grade to single B, there was a very high chance of Turkey moving to triple C, even a balance of payments crisis on the horizon. So obviously with the return to the orthodox economic management, what become is that very quickly that sentiment has turned around, and the Turkish ratings now, again from being triple C now, it's like from single B to double B, and over the medium term, basically, if the current policy mix continues, there's a chance of Turkey moving to triple B. So that affected the positioning of the fixed income investors a lot. So we can see, but again, all these 4 assets, like the segments are not the same. So there's a very big increase in involvement in hard currency, and both sovereign and the corporates, and we've seen, I think, all-time high corporate dollar bond issuance this year. Then the sovereign rate, basically, spreads has come down from almost 800 to now 200 kind of levels. So it shows how much improvement, and it's driven again by the foreign investors. But the biggest challenge now, which will be really crucial, is the local rates. So the market investors, they still have not that kind of conviction that the Turkey will be able to bring down inflation to single digits. So what you see is that you don't see long-term local rates investment by the fixed income investors, which I believe will be the key story for 2025. So the positioning, obviously, the interest is definitely there, but still there's a lot of things to do.
Yes. Okay. Thank you so much, Okan Bey, and thank you all for your valuable contributions. Actually, changes in the flow of funds are closely linked to the broader macroeconomic environment and the establishment of a stable climate. Long-only investors are particularly sensitive to significant shifts in macroeconomic and political trajectory, which are very important on their investment decision-making processes, actually. So in relation to that, let me ask my second question, starting with Emre Bey. How do you see the impact of changing external landscape on investment decisions. And in this environment, what are the increasing roles of investor relations? How do you think that the investor relations can make their companies more relevant to foreign investors?
Sure. So let's first understand where we are coming from. 10 years ago, at peak of the market, we had 25% foreign ownership in total market cap, and that would coincide with 70-75% free float ownership that everyone is talking about. But I used overall market cap. So 25% ownership at peak. The bottom was 8%. Now we are only at 9%. In terms of flows, in terms of total money invested, it was $80 billion. Today we have about 30 billion. So it's a big decline. And if you think about this 80 billion, take it to today with inflation, US inflation, we are talking about 110 billion. So there's a major change, and it's not only because of the situation in Turkey. There are some changes in the landscape. Starting from the first point, I think type of investors investing in Turkey used to be different. 10 years ago, 15 years ago, we had more active investors participating on a consistent basis. Now active investors are not that consistent. Maybe some of you will remember East Capital used to have, I say used to have because now the fund is merged with another fund, but we used to have a Turkish fund investing only in Turkish equities at the time. And 10 years ago, 15 years ago, it was either number one or number two globally, investing only in Turkish equities. Swedish fund investing only in Turkish equities, largest equity fund. That's interesting. It's not to talk about East Capital, but I think that was really telling you the difference. When I first applied to East Capital back in the days, almost 20 years ago, I called the reception and there was some Tarkan music playing. When I went to reception in person, they offered me Turkish Delight. And from day one, the fund had $200 million without any big marketing at the time. So it was a big hype of Turkey. And some of you will remember many Turkish funds at the time investing only in Turkish equities. So these investors, unfortunately, are gone. That's the first change. Also, if you think about this type of investors, for instance, we used to have a Balkan fund. Now it's significantly smaller. We had many other Balkan funds, and Turkey was a big part of those funds. Today, you can't invest anything almost in size in Balkans because liquidity is not there anymore. If you can't invest in the rest of Balkans, you can't invest in Turkey either. So these funds are also gone, okay? And the third one, Eastern European funds. These funds don't exist anymore. Again, go back 10 years, even 5 years' time, billions of dollars were invested in Eastern European funds, investing primarily in Russia, Turkey, and Poland, plus Balkans. And with what happened in Russia in 2014 and 2022 with the war, these funds are now being closed. Most of them don't even exist anymore. So that's a structural shift. These funds will not come back anytime soon. I can't imagine any Turkish funds being established nowadays. I can't imagine Balkan funds growing because of liquidity conditions. And I can't imagine Eastern European funds making a comeback. That's a structural change, and probably it will be around at least for a decade, if not longer. So our base is wrong. We shouldn't think about foreign ownership levels at the highest point. This was the first point. Second point is that if you look at now emerging markets index and Turkey's place in that index, Turkey used to have 1.5 to 2% of that index. It's not a big number, but it was still a considerably large weight in the index. Starting from 2018, that number started to come down. So Turkey's weight at its bottom was 0.2% only. Today we are talking about Egypt, or some years ago, Pakistan was included in the index with 15-20 basis points. Turkey's weight was 15-20 basis points at the bottom, 20 basis points to be exact. And 20 basis points for any global fund manager is just a rounding error. Unfortunately, this is the case. And today, with all this performance, we are only at 60 basis points. Is it Turkey's fault, quote unquote? It's not really, partly let's call it. because China has been growing, India has been growing, there is Saudi Arabia included in the index, there is some Middle Eastern countries included in the index and grew their weight in the index. So other countries are pushing Turkey down. That's number one. And number two is that Turkish valuations, let's say at 5 times PE now versus 10 times 10 years ago, are only at 0.6%. If it goes to 10 times, I think it will easily be 1.2. That's simple math. But 10 times will also improve liquidity conditions, market caps, and the technical perspective is that there will be more companies technically to be included in major indices. So Turkey can easily go up to 1.5% again. So there is permanent and temporary components of this decline in foreign ownership. And the third point is a bit more interesting, perhaps. I think supply leads demand a little bit. What do I mean by that? Supply of new companies, more relevant companies. When you look at Turkish index today and compare it to 10 years ago, 15 years ago, the index is almost the same. There's no new companies. If you look at top 30 companies, they are doing great. They are still the biggest companies, but there's no new additions. Whereas over the last 3 years, we had close to 200 IPOs. Today, we have about 600 companies. So 1/3 of listed companies are new, but they don't make it in relevant indices yet. So we need to see a prolonged optimist run in the Turkish market to go back to good old days. But even with that, due to these reasons, due to these permanent changes that I mentioned, I don't think we should be expecting historical high numbers, but we should be expecting, if anything, to go from 30% foreign ownership in free float to maybe 50% levels, but maybe not 70-75% levels as we have seen in the peak. How can investor relations functions contribute to that? I think there were some discussions before me. I think Turkey has, and I realized not while I was doing only Turkey, but when I started looking into many other emerging markets, I think Turkey is not one step ahead when it comes to investor relations functions. Turkey is a few steps ahead compared to many emerging markets. I think our professionals know what to do. But here the key is to remain consistent, to remain relevant, and to embrace the most recent trends such as ESG, and to think also maybe a bit harder about, instead of country, they can take leverage on different sectors. They can start rethinking about positioning of companies and maybe forget a little bit about the country position, because investors are also changing. They are becoming more sophisticated. And instead of investing in countries, they are investing in sectors and specific companies. So that's also a major shift in the landscape.
Thank you so much, Emre Bey. We would also like to hear Okan Bey's and Frederick's comment on that topic. Let me continue with Okan Bey, then move on to Frederick.
So the fixed income story is a bit different than equities, obviously. Back in early 2000, there were only 2 Turkish companies with bonds outstanding, Vadeli and Petrol Ofisi, and they paid it down for quite some time. There were no issuers out of Turkey. But since then, now I think there are around over 30 bond issuers out of Turkey, and we have the full capital instruments from the banks as well. So the universe obviously is much diverse, and there is much more interest from the fixed income investors on the Turkish corporates. So in a way, like that universe is growing, and if you think about it, I mean, if you issue a bank an AT1, probably it's as good as basically foreign direct investment, because it's a perpetual instrument. You can basically, you have to right to defer the coupon, you have to right to not to pay the option to not to pay it to the perpetuity. So I think it's a really welcome development, but unfortunately probably it brings a lot of extra work for the investor relations professionals. There are certain aspects. One of them is obviously, I'm sure that there are many colleagues here who dealt with the documentation. It's a very tedious process, and it's not like equities you do once and it remains forever. Every time you do a bond issue, you need to go over it. I know it's like a very, very hard process. Then dealing with the rating agencies, I think it's a completely new and very, very important role that investor relations together with the treasury departments to play. The rating agencies, I mean, we talk about the ratings, and that ratings makes a huge difference. Even though that's kind of, maybe we can talk later, affects, like it's very kind of a straightforward process from outside, but the investor relations function has a huge role to play in terms of dealing with the ratings, the public ratings, and it has a direct effect on any company's cost of funding. And maybe lastly, the interest of fixed income investors is quite different. In many cases, it can be contradictory to the equity investors. So as fixed income investors, we are always worried about the downside. We don't look at it as whether the glass is half full or half empty. We say that, okay, the glass might fall and it can completely break down. So my wife hates me for that because I look everything from a negative perspective, what can go wrong. Yes. So that balancing very optimistic equity investors, they want to growth and everything versus pessimistic fixed income investors, and balancing those two different kinds of investors is a pretty big challenge for the investor relations functions overall.
Yes, it is. We have started to experience that as well since April, after the first bond issues. Okay, thank you.
Perfect. From an ownership perspective, as we've just seen, active investors are on the rise, and that provides positive momentum. However, the flip side is the rising passive investors. And that is not only a Turkish trend, this is a global trend, and it basically puts investor relations departments into like a challenge of kind of how do I communicate it? Like when I compare it to 10 years ago, there weren't many passive investors, and so you could just cross them out and focus on the ones that do make an active investment decision. But now you need to factor that in. How do you communicate it? Also, kind of, because they're very sizable investors and they do make up quite a lot of your investor base. So it's not that you can't communicate with them. It's just you communicate different. You don't pitch your equity story to them. You pitch your governance story to them. They have a lot of questions, very detailed questions around your business governance and also sustainability. We will hear about it this afternoon. Those kind of things. And it's very challenging for an investor relations department to cater to both parties, I think. And the second point is the active investors are also in need of more information. They are heavily regulated, and not only in Turkey, but globally. So they have asked more detailed questions than ever before. And I think investor relations faces the challenge of catering to the detail and the depth of those questions. But as we heard, and I agree with Emre, that Turkey is a few steps ahead and is doing a great job there. But it's for me, it's a matter of keeping that momentum and continuing and evolving. Like the trends we heard about, AI is a big trend, sustainability is a big trend, and factor those into your story, into your work.
Thank you so much for your valuable insights. As we are approaching towards the end of our session, I would like to share my experience regarding an important milestone for Ford Otosan and myself, actually. Later, I will direct my final question to Okan Bey, but we will have some time after the answers. We will also have a bonus question. We will see throughout the panel, actually. And our question will be in connection with the bond issuance. You have already touched a bit in the previous question. But before directing my question to you, let me share the experience, actually. As for Otosan, first time in our history, we tapped into Eurobond market in April. And we have successfully completed a $500 million Eurobond issuance targeting foreign investors. This development enabled us to enhance our financing pool with the relatively favorable financing terms, actually. In that journey, we met over 75 institutional investors through the roadshow programs we organized in London, New York, and Boston. I should say that this was an exciting and noteworthy experience, as it was an opportunity to engage with fixed income investors other than the equity investors. This also allowed us to broaden the scope of investor relations activities and diversify our investor base. We haven't experienced it before, actually. However, as the IR head of one of the most valuable company traded in Borsa Istanbul, I must emphasize such a venture requires more than face-to-face meetings. And though quite exciting, the pre-issuance period, you are much more familiar with this subject actually, was incredibly intensive and required both strategic foresight and meticulous execution. From the due diligence process to working closely with the rating agencies, drafting the prospectus, it was such a nightmare for us, and managing all the legal, regulatory requirements. It was truly the result of extensive effort and collaboration of too many departments within the company, actually. Then our efforts resulted in bond issuance evaluated by BB Plus by Fitch Ratings and BB Minus by Global, S&P Global Ratings. So, Okan Bey, coming to you, from the fixed income investors' point of view, what do you think the significance of indices and public ratings for the investor community? You have already mentioned a bit in the previous question, but we would like to hear in detail during this actual question. What is the importance of index tracking, and how does the inclusion or exclusion to any index or changes in the ratings become critical on investment decisions? And within this framework, what could be the role of investor relations in especially public ratings?
Yeah, I'll start with the rating agencies, the role it's played, which I believe is quite unique to the fixed income investors. For an average BBB company, so the ratings, as you know, it's like the school grade you have from AAA to all the way to the CCC, and then if you basically default, it's D. It shows, obviously, the credit quality of any issuer. So the cost of borrowing on average, like through history, for an average single B issuer, if you compare it to the BB and BBB, it's 2 to 3 times higher than the BB, 6 to 7 times higher than the BBB. So that ratings is really, really important. The rating agencies, 3 of them, as you know, they are kind of a nice little oligopoly. Sorry, Frederick. And they are really important not only for the investors, but any kind of regulation, liability-driven investors, the risk-based, the insurance companies, the banks. So they really have a very, very important role to play within the global financial system. And that kind of rating process is really, really interesting, because the way they do it is that it's a very monotonous process. I'm sure you dealt with it. So they just calculate some ratios and the numbers, and on the basis of that, they have a grid, and then you will be rated at this one, and then they make adjustments. So on the surface, it's a very objective process. But as I mentioned, the real role of the investor relations function dealing with the rating relations is even the ratings of 1 or 2 notches makes a huge difference in the borrowing. I mentioned that Turkey, with a gross external debt of like over $400 billion, 1 basis point, so it's like 1 of like 1,000, 10,000, can have a huge impact in terms of the cost for the country. And the role played by that investor relations And the ratings is really, really important, not only for the issuers, the countries, and everything. So it's really important for the rating agencies to proactively deal with the investors, understand their methodology, and to make sure that they are on top of all these subjective factors that from their base ratings they can move up and down, can have a huge impact on their assigned ratings. So I cannot overemphasize the role of the rating agencies and how important the ratings for fixed income investors are. So we have different mandates from different investor base. So our biggest investor base are the big insurance companies, pension funds. So normally we have the discretion to manage their investments, but what we do at the start, when we agree, they will put limitations. So our biggest investment pool is the investment grade investment. So that basically we hold minimum BBB minus rated bonds. So we are forced to sell if that bond's downgraded from BBB minus to BB. Again, the second most important kind of level is the CCC. So most of the global asset managers like us, they are forced to sell their investments if they fall below single B to CCC. So those kind of levels are really important. So that's why, for example, up until the presidential elections and the change in the economic policy, we were all worried about Turkey will move to CCC and it will cause a lot of forced seller by the investors. So that's why that caused a lot of positioning or pre-selling of the Turkish risks at really, really very unattractive prices. And for a long time, Turkish issuers, the market was close to them. So they couldn't come and issue. So that's why in the role of the rating agencies, how they are assessed by the investors, are, I think, really, really crucial from our perspective. In terms of the indices, the JP Morgan, SMB, and MB are the main ones. And what we've seen is obviously a big, big increase of the size of the global investment universe. Now the emerging markets, if you include the hard currency, local, and everything, is above $2.5 trillion, and it's much bigger than any other US spread products, whether it's US high yield or European. So it's a really, really big universe. There are around 80 countries in the index, over 1,000 issuers of the companies. And given that it's a huge universe, for us, investors, that index roles is more for diversification. We are not as much as bound by the equity investors, because as I mentioned, the ratings are much more important. But again, basically looking at that universe, we tend to focus on the large countries. So our firm, for example, our priority is 30 countries out of those 8 countries. So for us to invest these smaller, say 50 countries, our required rate of return or due diligence is much higher than a well-established country like Turkey.
Yes. Thank you so much.
And maybe the last thing I think is really important is the local currency. As I mentioned, the biggest challenge for Turkey is to make sure foreign investors' investment in local Turkish, long-duration local government bonds. So, for example, in South Africa, the share of foreigners in the local bond market is over 60%, whereas in Turkey, it's still single digits. It's very, very low. So they're really kind of moving that long-duration risk of both the rates and the FX to foreign investors will be really, really crucial for deepening of the Turkish financial markets, which will basically allow a lot of the Turkish companies to borrow long-term in Turkish lira. But obviously, that very much depends on the inflation.
Yes. And as far as I remember from the process we experienced, the time window is one of the most critical ones. That's why we had to delay it by 3 months periods in order to catch the right time window for issuance. Okay, so thank you so much for your invaluable insights. I think that we still have some time left to use. Before ending our session, I have a bonus question for everyone, for 3 of you. I would be very happy if I could get your answer in very short. Let me ask it. If there were a touch of magic, what single change would you make to accelerate the inflow of long-only funds into Turkey? Do you need crystal?
Maybe I'll start. I mean, it's very easy for us, inflation. So as you know, I mean, we have a bad reputation of asking for high rates and everything, the so-called interest rate lobby. Actually, we don't want just high interest rates. What we want is high interest rates per volatility. So we want, which is driven by inflation. So if we have a 3% inflation in Turkey, our required rate of return will be very, very low.
Then our lives will turn into a boring situation.
Boring is good. Fixed income investors like boring.
Great. Yes, Frederick.
Okay, from my perspective, I would like to talk about ownership. And ownership and good idea is always about data, a lot of data and the accessibility of data. And that is everywhere. So I would like issues to have more frequent access to data in general. So because the world is changing, and with a lot of data, you can adjust quicker. That will be my wish.
Yes. Currently, we are able to reach 4 times, as far as I remember, from the regulatory side to the investor base list from Central Registry, actually. Okay, Emre Bey, can we also get your comments, valuable comments on that?
Yeah, maybe I have an optimistic view on data in Turkey. I wish my other markets had the same quality and frequency of data.
Yes, exactly.
And maybe I'll be a bit of a populist here, and I have the pain of being on the screen, but I wish the quality of this community is replicated in other institutions of Turkey, and we have a digit less of inflation.
Yes. Great. Thank you so much. Okay, so unfortunately, we ran out of time and reached the end of our session. I would like to thank our audience for listening and to TÜYİD for organizing this wonderful summit, but most importantly, to our esteemed panelists for sharing their invaluable insights. Çok teşekkürler dinlediğiniz için.
Thank you.
Thank you.